Hello, and thank you for tuning in to the MacDesk Floor Report for Wednesday, August 24th. I'm Rebecca Darst, speaking to you from the floor of the NYSE. We're coming off a brief summer broadcasting hiatus that coincided with a period of high volatility and almost daily macro risk-driven swings in the market. Now, with traders continuing to take cues from European sovereign debt concerns and ahead of the Fed's Jackson Hole meeting on Friday, here's the market setup as we're seeing it right now. We came to the floor on the strength of a 3% rally yesterday for stocks that was driven by a bit of short covering and a let-up in macro headlines from Europe. Just to put the recent volatility in a bit of perspective, one longtime trader pointed out to us today that Tuesday's 300-plus point gain in the Dow was only the third strongest day of the month so far. This morning, the futures seem to be indicating a bit of give back, with Asia-Pacific stocks lower after Moody's downgraded Japan's sovereign debt one level. European stocks wobbled a bit on some surprisingly soft Eurozone industrial orders for June and a German business confidence survey which came in at its lowest level in more than a year. We also saw the return of peripheral risk after news that Finland had secured a collateral arrangement for financing the Greek bailout. This led to speculation that other countries, namely Austria, the Netherlands, Slovakia, and Slovenia, just as a start, will queue up to demand similar concessions. This drove the two-year yield on Greek government notes to 42% earlier today, at the highest level since the introduction of the euro. But here's the good news. European stocks, which have been driving the boat here in New York for the past few weeks, actually reversed course and found some relief on better than expected U.S. data points. This morning's July durable goods numbers showed an increase of 4%, which was twice the increase analysts had expected and led to an immediate 10-point pop in S&P futures. Some of our analyst friends are keeping the euphoria in check this morning, reminding traders that the gain was led by transports, which are typically the most volatile component, and that excluding aircraft and cars, you get a much cooler number. Still, the number represents a recovery of more than one-third since the April 2009 low. Also, at the top of the 10 o'clock hour, we got a much better than expected June housing price index number, which showed an increase of 0.9% month over month. This is the largest such monthly gain this year, as analysts on the whole had been expecting an increase of only about 2 to 0.4%. And take a look at Bank of America. This is a stock that has not been able to catch a break in recent sessions, but a bullish analyst report this morning put a 12-month price target of $16 on the stock, and we're seeing that stock rally better than 8% at 684. VIX is trading below a reading of 35 for the first time in more than a week, bringing the spot reading in the VIX to only about a 2-point premium against the September VIX future. Now, just to give you a sense of how acute the sense of panic in the market has been, as recently as end of last week, which is with an option expiration, the spot VIX was trading at about a 10-point premium to the September future. For additional market color, be sure to check your inbox at 1 p.m. for the midday. For now, that's it from me, Rebecca Darst, for the MacDesk Floor Report.